The price of natural gas continues to push higher, and we've just seen it move out to its best levels again for the year so far. But how much higher can it go? Are we going to see it break through $5, or actually is now the time to start worrying about a deeper correction? I thought it'd be interesting to do an update on natural gas, considering the ongoing strength. We've seen this trend since April just chug higher, and recently traded back to its best levels since November 2018. Just off the August lows, the price is up by almost 30%. So how much more strength is there to come? We've done well out of buying this trend on the way up, but it's now the time to get worried. We do have some trades running at the moment. So at the moment, the open profit on the existing natural gas positions, you can see they were all filled separately, but at the end of July, when we did that video, the open profit is £714. So we're up almost 3 times the risk on that trade. So I think we might need to do something with the risk management of that, move the stops up. But also, is there another trade to do here? You know, this trend is still going. The market still appears to be strong. Let me talk about why we're seeing natural gas rise so strongly. Then we'll come back onto this and take a look at things in a bit more detail. Hello, I'm David Jones from Capital.com, and I thought we'd do an update on natural gas. It continues to be a really interesting market over recent months, given the strength we're seeing, which is great for those open positions that you saw there. And I just thought, well, let's take a look at it, see what we do those open trades. Is there another trade to do? Talk about some of the recent news, look at the levels, then get back onto the platform and take a look at it in a bit more detail. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, that'd be great. It helps support the channel. It means we can continue to push out lots of different content throughout the week on the various markets that we cover. Plus, of course, every Friday at 2:30 UK time, I now do a live stream direct from our YouTube channel. If you're subscribed with the alarm bell notification pushed, you get a message off YouTube just as we're about to go live, so you can join in with the live stream. Right, let's get into it. Take a look at natural gas in a bit more detail. So yet again in September, we've seen new highs for the year so far. So new highs for 2021. The price of natural gas is almost at a 3-year high, but not quite. We're back to levels last seen in November 2018. So it is interesting to see if we're going to burst through those all levels. We'll talk about some of the levels in a second. So there is something of a supply-demand imbalance for natural gas. We saw in the last couple of months, European inventories fell to their lowest levels in more than a decade. They're still well below the 5-year average for inventories. So supply looks to be pretty tight. We've also had some impact from the weather from Hurricane Ida in the US. We saw several natural gas production plants effectively being taken offline as a precaution against any damage happening. So again, that's something that in the short term has squeezed supply a bit as well. And exports from the USA still remain strong because of these tight supply issues in Europe, as previously mentioned, and also in Asia. So it is a really fine balance at the moment. And I think this is what's driving the market, this tight supply, but still the demand there. But if we look at the price action, we've seen new highs for the year this month. That trend is still clearly holding. On this channel, we always look at trying to follow trends, and it's done well so far for the existing trade in natural gas. But given that the price move is up more than 50%, in the last 4 months, and we're back near 3-year highs. Is this move overdone? Is all of that supply-demand imbalance now being reflected in the price? Or actually, are we going to see more gains? Are we going to see 5 broken? We'll take a look on the charts in a second, look at things in a bit more detail. Let me just talk about the levels to watch first. So for me, the immediate level, $4.80, the highs seen earlier this month, just a couple of days ago. After that, those November 2018 highs of $4.95, and we got the $5 psychological levels. So a lot to watch if we do start to push higher from here. Lots of support left on the downside. The most immediate one of these for me are the lows right at the end of August, coming in around $4.23. So as usual, to put some color on these numbers and see where the opportunity might be, let's take a look at the charts. So here's the trend since April. This trend line's done a pretty good job again in mid-August when we saw that sell-off down to about, 380, 375, that sort of area. We saw the trend line hold and the price has moved higher still. More about the trends and the levels in a minute. Let's take a look at the RSI. Perhaps what is a little bit concerning, we have this thing called bearish divergence going on with the RSI. And that's where the market pushes to a high, pushes higher still, but the RSI isn't making higher highs. So it can be a suggestion that perhaps the trend we're following is running out of steam. So I think that's perhaps one thing to bear in mind, if I'm thinking about doing another trade up here. But if we look at the trend, this is where we are. It's a great trend. And for me, the only question is, well, do I buy in now? Do I add to the position now? Or do I perhaps wait for something of a sell-off? Let's take a step back and look at the bigger picture. So I flip this out now to a weekly chart. So each candlestick represents a week's worth of trading. You can see those old highs, 5th of November, 2018, coming in around about 495. So that's an area to watch. Then we go back after that. We're looking at sort of 2014 highs, June 2014, around about $5.10. So definitely a bit of a problem potentially up at these levels. It doesn't seem, famous last words, that it's going to go sailing through here. So let's take a look at the trend from a shorter term point of view. So I flip this to an hourly chart now. And what I might do, I think we have seen the price sell off a little after hitting fresh highs to the year. It drifted down to about 458. So what I'm going to do for the existing positions, I'm going to move the stops to $4.40. So if we see a deep sell-off, then we'll get taken out for a profit. When it comes to a new trade, bearing in mind we've seen something, an extended move over the last few weeks and this bearish divergence on the RSI, I'm sort of tempted to wait for a sell-off, to see if we do get a sell-off in the price of natural gas. So what I'm going to do, I'm going to leave an order to buy. I'm going to put an order to buy and I'll put that in at $4.30. So if the price gets knocked back to where it was towards the end of August, then that trade will get filled. So I'm going to be a buyer at $4.30. And because natural gas is a volatile market, I need to give it some room. I'm going to move my stop. I'm going to have a stop down at 360. So I'm going to sell it well below the other side of the August low. So, it is 70 cents away, but it's a market, as we know, that once it starts moving, it can move really quickly. So let's just set that trade up. So we're ready to go. At the moment, the market is 467 to buy. I'm going to buy 500 if the price drops to 430. So I'm going to trade with the trend, but I'm going to wait and see if we get a correction. I'm not interested in going short yet because that trend from April is still up. If that order gets filled at 430, put a stop loss at 360. $3.60, and that's for our usual risk on these trades of around £250 or so. So let's place that limit order. So that order's in, and that will just sit there now at 430. We'll see if that order gets filled, and I'll move the existing positions. So at the moment, the stops on the existing positions are in at 370. Let me just move those up. Like I said, I'm going to move those to 440. Let me just move all of those. So that's done. So that existing position where I'm long 1,375, I've moved all the stops on that to $4.40. So I'm giving the market a bit more room. If it bounces from here, I'll still be in the trade. But if we see the price drop by about 26, 27 cents from here, I'll be taken out. If I look at the orders waiting to happen, that's the one I just placed. So buying 500 if the price drops to 4.3 with a stop 70 cents away from that. And we'll see how it works out. This trend is still going. Trends don't go on forever. But with the market setting fresh highs for the year and nearly 3-year highs in the last couple of days, it's a market that is still strong. Whether it's going to sell off from here remains to be seen, but a fascinating market to watch. And if it can start moving higher, perhaps we will see it through $5. We'll come back and do an update in the weeks ahead. That's it for this update in natural gas. Continues to be an interesting market. We'll see if we can see further highs again this month, or are we going to see a deeper correction than we've seen so far for natural gas? We'll come back to it and do an update. But for now, from me, David Jones, and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.